If life insurance didn't have any other benefit other than the rate of return and borrowing function, unpopular opinion, I don't think what we do is that valuable. If people understood what I know about life insurance and how it can be set up and used, there would literally be a freaking line outside the door. I told this to an executive at an insurance company, and he said, no one will ever line up to buy life insurance.
Nobody wants to buy anything, but everybody wants what life insurance does.
Agree.
How many people actually go through that? They want everything whole life does. But then when you tell them what it is, they don't want it anymore.
Yep.
That's sad.
Why do you recommend people use infinite banking and buy cars?
Why haven't you gone through and become an IBC practitioner?
It's a great question.
Yeah.
There's really two answers I'll give you. Now I'm going to ask you a couple hard questions. You ready?
Good.
Brother, welcome to the show.
Hey, thanks, man.
You know, what's interesting is I think when I had a podcast back in the day, you were a guest of mine. I've been a guest on your show a couple times. You spoke at my very first advisor and asset mastermind, but I don't think I hosted a YouTube video of us yet. This is very special.
Holy cow, yeah,
I
right.
probably should have, if I was being smart, is taken our old podcast that we did on Zoom and repurposed it. We just never did. But it's an honor to have you here. We're at a conference, and anytime that I get to sit down with people that are making a difference, man, I want to make that happen. So welcome officially to the YouTube portion of the show.
Honor's all mine.
All right. So for the 10 people on my channel that probably don't know who you are, it'd be cool to just give a backstory of who you are. And then what I'm hoping to do is dive a little bit deeper into just these topics that a lot of times when we're on stage or you're on stage or we're talking, we're giving the basics of what infinite banking is, the power of life insurance. And that's cool. The beautiful thing about what we can do today is we can go deeper because the audience that watches your channel, the audience that watches my channel, knows the philosophy and they want to go deeper. So, let's just have fun, man. Let's have fun. And just very grateful for you. But for the 10 people that don't know who you are, just give a little backstory of you didn't come out of the womb wanting to sell life insurance. And you have a pretty cool story. And so I would just love to have that captured and just give people an essence of who Chris Naugle is.
Well, I certainly didn't come from a family of money. I came from a very middle class, actually lower middle class family, raised by mom. And the one thing she always did is she always dreamed and believed in me. If I had an idea or a goal, she was the one that always kind of said, Chris, go do it. She never shot anything down. I had the craziest ideas. I mean, one right up to, as I was going through it, as a child, I rode BMX, I skateboarded, and then I was turned on to snowboarding and I found my love. So I started getting this idea that I wanted to be a pro snowboarder. I was watching all the videos and I'm like, that's the life I want. Everybody else in my family that I would tell this, because, as a kid, because I was a kid at that point, they're like, that's great, Chris, but what's the real plan? What do you really want to do? You talked about being an architect or, doing this or working at the factory. And I was like, no, that's what I want to do. My mom was really the only one that just truly believed in me. So take that and fast forward that, at 16 years old, I got my first real job. I worked on a farm at 14, but it was my best friend his dad's farm. And it was awesome. I got to go out and work, and it was just a great thing to do. I would tell every single parent and child listening to this, and I know it's a different era now because I'm getting old, but every kid should try to work on a farm, even if it's for one summer. It's very hard work, but it is such a good experience. So when I got this real job,
just fast forward, sorry.
Yeah.
I grew up, and we had our neighbors growing up were Amish. So I grew up helping them riding horses and all. And then our neighbors, again, that weren't Amish, I pretty much worked there probably 3 or 4 years of my life from 9 years old to 12 doing chores daily. And I didn't really get paid for it either. But I look back on that and I don't talk about this ever because I didn't get paid for it. So my first official job was working at a chicken farm. But I look back on that and that was very foundational to who I am. So I agree with you. I think working on the farm is something that we could unpack more, but continue.
You said a key word, foundational, because that is, I like to think my work ethic, the foundation for what I do today, it was all formed there because it was really hard work, but there was never a day that I didn't like it. But as you get older, you turn 16, you got your car, and now I needed a real job. So I got a job at a restaurant, and I had a couple of summer jobs at restaurants, but this was my first real job. And I was really excited about it. I was a prep cook, but the owner of this restaurant was such a nasty human being that he degraded me every day I went in there, to the point where I was scared to go to work. Like, imagine that, like your first real job and you're scared to go to work because you know the second you walk in, they're going to start in on you and start degrading you. And here's what he would do. And just because I got to give some relevance to it. I would come in and he'd send me out. They had like this little shack out in the middle of the parking lot. They had like the cold freezers and everything else. And he'd always send me out there to get something. And it'd always be like, Chris, go get this. And it was like, I don't know where this is. He didn't say, well, it's here. So I'd go out there and I'm looking through this whole freezer and it wasn't there. Dude, it was never there. And I'd come back and I'd be like, Dom, like, I can't find it. Yeah. And he'd go off the handle. You're going to make me go back there. And he'd go back and guess what he'd come back with? Nothing. Then he'd go in the cooler that was in the restaurant and there it was. And he'd be like, you know, but that's just how it all went. Uh-huh. So the one day I came in and he started in on me and I don't know what came over me that day, but I quit. I took my apron off. I said, I quit. I threw it and had this heirloom kind of, you know, if you've ever been in a kitchen, there's like the area where they stage all the meals that are done. Yeah. And I threw my apron on some of the meals that were already there, but it hit the heirloom and it hit the ground and smashed. And he went off the rocker as I'm walking out the door. That was my first real job. And that was the experience I had. But, you know, I wasn't the kind of quitter that would just come home to my mom and say, hey, I quit my job. So I had been thinking about this and I'd been thinking about this idea of a clothing line. Because back then there really wasn't skateboard, snowboard clothing, or there was, but it was like super hard to find in Buffalo, New York. So I'm like, I'm going to start designing my own t-shirts. My art teacher and I used to print shirts after school. So I'm like, I'll just get him to show me how to make screens and we'll print my own stuff. And that's exactly what I did. My first company was started when I was 16 years old, 91, 92. And it was, I printed a dozen t-shirts and I ordered them on my very first Visa that I ever had gotten. Mm-hmm. It was a $500 Visa. And I sold them out of my backpack, printed 2 dozen, sold all of those. And then I just kept going. And then I started recruiting my friends who wanted a shirt. And I'm like, I can't just give you one, but hey, if you sell a shirt or 2, I'll give you one for free.
There you go.
So then I was recruiting my own sales team. And this went on for the period of a year. And I got pretty big with it because I didn't just sell it in school. I started actually designing catalogs. And when I was traveling around for snowboarding, because remember, my dream was to be a pro snowboarder, but to do that, you got to have money to travel. Mm-hmm. So I'm trying to sell clothes at all these shops that would sponsor these snowboard contests. And they were actually buying my stuff. And it was the coolest freaking thing. I'm like, okay, well, I need a summer line and a winter line. Then I'm like, I need a fall line, a summer line, and a winter. So I just kept expanding this. And I had the best freaking time doing it. My friends were drawing art. I was recruiting other people. I was going to concerts and selling it. And then a pivotal part to this story, and then I'll get right to it, was I was on the road going to this one shop that I knew was going to buy my stuff. It was called Hard Packed. It was a snowboard shop. And the owner, Tim, I walk in, he puts an order in. It was like $750, which to me was a ton of money. Wow. And then, you know, he says, hey, Chris, do you want to go snowboard? Because it was in the winter. And of course, I always had my board in my car. Yeah. And I'm like, yeah, what time's the shop close? And he says, the shop closes at 5. And I look at my watch, it's like 11 in the morning. And I'm like, man, there's no way I can just hang out that long. I got to get home, you know? And he says, no, let's go right now. Cause I'm thinking he wants me to like just hang out and then go later. And he's like, no, let's go right now. And I'm looking around the shop and I'm just like, there's nobody else here. And he's like, dude, I'll just close your shop so we can go ride. I mean, it's not every day we get to ride. I think he actually said, it's not every day I get to ride with Chris Naugle, you know, something like that. Because I was starting to make a name in the local scene. But anyway, like a light bulb went off in my head. And I could not stop thinking of that moment because I'm like, he physically has the freedom to just close and go do what he loves to do. Because it was a snowboard shop, so he loved to snowboard. And that's what we did. So obviously, you know where this went. My clothing line, I had to have my own shop. And that's where my idea for Fat Man Board Shop came up with the guy that I partnered with was an older gentleman by the name of Steven. And we ended up doing the shop together. We opened November of 94, but I needed $70,000 to do this. And I didn't have 70 grand. Every bank turned me down. My family said I was crazy. Everybody put me...
Even your mom?
No, I'll get to that. Okay. Everybody but my mom. And this is why I call her the unconditional one.
Wow.
So she saw this dream dying. She knew how much work I had into it. She knew the business plan because I had run it by her so many times, rehearsing, trying to go to the banks and get them to give me loans. I had one bank that would give me a loan, but it was an SBA-backed loan that needed collateral. Mm-hmm. I didn't even know what collateral was. I remember the banker telling me, I don't remember his name, but he said, hey, we need collateral and we'll give you the loan. All I heard we'll give you the loan.
Yeah.
I didn't hear this collateral thing. And I'm like, oh, so what is this collateral? Like, I'm thinking, do I have to sign something? He's like, well, we need something of equal value to the loan so that if you don't pay us, we have an asset that'll secure it. And I'm like, well, I've got a KX 125. I've got a baseball and football card collection that you would love. And I think at that time, I don't know if it was a LeBaron or an 86 Buick Skyhawk or something. And that wasn't what they had in mind. So my mom saw this dream dying. She had one thing in the world, and she still lives there today, which was the house that she got in the divorce. And her house had exactly $70,000 in equity. So I'm 17, starting this snowboard shop, which back in the 90s was like a new concept, could fail. And she puts the house on the line so I can get that loan. I mean, that was when it all got real, because now when that shop opened, I knew that if I failed, my mom lost the house. We lost the house. So that was like how my upbringing went. So the rest of it's kind of like really cool, because I was a pro snowboarder. I became a pro. Yeah. And I was running my
what was the business thesis at 17? Like, what was your business plan?
The business plan? Yeah. I still have it today. And it was like projections and marketing. And it was like all these trends of what we were going to do. And I incorporated my clothing line into the whole mix because it was more profitable than buying Fresh Jive or Stussy or those brands. So that was the whole thing. I look at it all the time. I actually did a YouTube video on it. But it was like going through the projections. And just folks, like, I'm 17. I'd never probably made more than $15,000 to $20,000. And on my projections, I was going to make $30,000. That was going to be the amount. That was, to me, more money than I could even spend. Like, that's how I looked at it. I'm like, I'm going to be rich. Yeah. But anyway, like, the stores went well until the .com crash happened. I was living almost a fairy tale land because everything was so perfect. And the very first recession I ever came down or ever had to deal with was that .com crash. And when it hit, my business tanked. And I didn't know how I was going to make it. I had 3 stores at that time, highly leveraged. I wasn't like out there spending a bunch of money, but I had bought a new truck, and I didn't even know how to make the truck payments. It was $189 a month. Man. That ZR2 S10. So, like, how the story transitioned is I was going to lose the stores if I didn't figure it out. So I needed a job. First time in that whole intro where I now needed to go back into the workforce, I put my resume out, which fit on one page, and the only people that called me back were Wall Street firms. So that's how I landed in Wall Street. I ended up in Wall Street. It would have been 2003 when I officially started. And
so you're like 25?
I was 24. Yeah, so I was 24, but I quickly turned 25 because I started in June. Yeah. My birthday's in July. Okay. So I was technically 20. What did I say?
Yeah, 25.
24, 25, somewhere in that range when I started in Wall Street. And in my first year in Wall Street, I made $74,000, which was obscene amount of money for me. Bought my first house. But the hardest part was, remember, is all this other time, like, I showed up to work in a hoodie and a beanie. That's how that was my life. Now, all of a sudden, I had to put on a blue, a black, or a gray suit every single day. And it messed with me, man. I'm not going to swear, but it really messed with my head because I couldn't make the transition. I physically couldn't do it because I felt like I was abandoning my dream. Yeah. Even though I was still a pro snowboarder, I still had the shops. Putting that suit on was like I became a person I didn't know. So the only way I was able to make that transition, there's this brand called Volcom. I still wear it all the time. It's surprised I don't have one on now. But this company made suits for their athletes. Because I was an athlete, I made some phone calls to the rep. I said, hey, can you get me one of those Volcom suits? I need it in black, gray, or blue. And they sent me 2. And I ended up wearing those suits almost every single day to the office because it made me feel like I was like that elite advisor because I had a Volcom suit and no other advisor did. So that's like where it all changed. I'll pause there and just kind of
so did you lose the stores or did you get to keep the stores while you worked on Wall Street?
So when that happened, I ended up shutting down that Orchard Park store, which is our 3rd store that we opened. It was a boutique and I just couldn't keep it open, and we transitioned that into the other 2 stores and ran those. The stores I ended up selling in 2010. There's a lot that happened from that period of 2003 up to 2010 when I sold it. But the big pivotal moment was 2008 when the Great Recession hit.
I'm going to ask you a question about Wall Street, but what were some of the things that you learned about your first real business and what was it called? It was Fat Boys.
Fat Man.
Fat
my
Man.
shops.
Yeah,
Yeah,
that's
PHAT.
why that name.
Fat Man. Well, my clothing line was Fat Clothing Company, so PHAT Clothing Company.
You're not obese, by the way.
No, I'm soaking wet, about 152 pounds. So Fat Clothing became Fat Man because it was fat, and then I was the man.
Got it.
We just put them together. It was just kind of.
What were some of the business lessons that you learned, good and bad, about yourself and business?
Well, the whole first part, like the business was me.
Yeah.
It was a lifestyle business. Everything that I loved was what the store was. So
Yeah.
I was so connected. But the problem was I worked in the business and
Yeah.
I was there every day. Nobody could do the job better than me.
Yeah.
I had people that worked for me, but I didn't have managers because I was the guy.
Yeah.
So when I went to Wall Street, like when I took the advisory job, that changed. I needed to put people in manager positions. And I remember at that point, it was very difficult because I couldn't let go. It was like my baby, right? I was like, I don't want to just hand it over, but I was forced to, because when you make 74,000 there and you're hemorrhaging money over here, you just very quickly pivot.
Yeah.
And I remember all of a sudden I started seeing things turn. The managers that were running the business were running it better than me because they just had different skill sets, different ideas.
Yeah.
And I was working on the business. So I wasn't working in it very much. I would go there at nights and I would be there in the Christmas time, but I wasn't there during the day. And when they were there during the day, they were doing different things than I would have done.
Yeah.
But what ended up happening is now, because I was working on it, I was focused on marketing, building skateboard, snowboard teams, working on management plans, projections. And like I started treating it like a true business. Not that I didn't before, but now that's all I did. And our numbers just started skyrocketing with the stores.
So Wall Street, how long did you work on Wall Street before you transitioned into real estate and all?
Well, real estate and Wall Street and the shops all happened at the same time.
Okay.
My first real estate flip was in 2006.
Okay.
Another one in 07, and in 08, I bought that dilapidated paint store that eventually became the strip mall that I developed. But I almost went bankrupt because of that, because I bought that right before the Great Recession hit. And I took a hard money loan at 15% because nobody would give me money for it. It was like 370 grand I needed. But I ended up pulling it off, and I only pulled it off because my wife, Larissa, who you know, she had just moved into my house. She wasn't my wife then, she was my girlfriend. And I remember sat her down and I said, sweetie, I need your help. I need you to help me pay the mortgage. I need you to help me pay the utilities. And by the way, I'm going to move my friend Pete and his girlfriend Jessica into that bedroom. And then I'm going to move my other friend Jessica in upstairs, as if I should have just said, like, any questions.
Yeah.
But when your back's against the wall and you have nowhere else to turn, like, that was it. That was the only place I knew to go.
So I have so many questions. Let's go back to Wall Street. What did you do on Wall Street? And I know that you felt a little bit claustrophobic of like, hey, this is not me, but like you made good money. What were you doing, and what did you learn through that process?
When I first started, the firm that I started with was just like I don't even know what you call it, just a stock chop shop.
Yeah.
It was a bad firm.
Yeah.
And I remember the guy that interviewed me slid keys to a fancy car across the table and said, if you work at this firm, you're going to have one of these. And I had walked past the car in the parking lot. I think it was
it's like Glengarry Ross kind of scene.
No, it's like Boiler Room. I'm sure he watched Boiler Room right before he interviewed me, and I'd never seen it. But that firm, like, I started and I went out in the field a couple of times with them, and I just listened to how they did it. And what turned me off is we'd leave the client who he just told this whole story, and I was just kind of soaking it all in. I'm like, this is awesome. And we get in the car and he's just talking crap about the people. And I'm like, what? And that's just,
it's just a game. It's just a game. Like, they're just literally using people.
And these guys were making tons of money, but I ended up just, me and the main guy, like, I remember sitting in his office one day and he was just giving me just a lot of crap. And I'm like, I just don't need this. And I had another job offer from New York Life, which is an insurance company, but I didn't want to sell insurance.
Yeah.
That was like, I was absolutely against selling insurance. You know how New York Life got me? The managing partner back then, his name was Kamal. He says, listen, you know what we're looking for? We're looking for an investment advisor to really come in. You'd have to start with the life insurance side, but once you're here for 2 years or you hit this production level, you can then get your licenses for securities and get your Series 7. And then I will personally get you a position in Eagle Strategies, which is a registered investment advisor. Because back then, New York Life had just started in the investment management division. So I had a front row seat. And that's exactly what happened. 2 years in, like clockwork, I was crushing it. 74,000 next year. I think, I don't know, it was like 100 and something.
But you're selling life insurance.
Yes.
Okay.
That period of time, those years, it was.
And what year was that?
Life insurance. That would have been like 2004 and 2005.
Okay, so before your first flip, you're at New York Life, you're selling, and then So it then continues. So after
And
2
it
years.
was whole life because New York Life is a whole life company. But you see, there's an interesting thing. Like they always talked about whole life, but back then the product they were pushing, believe it or not, New York Life was universal life.
No way.
I swear to you, because it was more profitable. I mean, we all know that today, but I didn't know why back then. They were just like, hey, interest rates are high. This thing's got a guaranteed 4%, which whole life did, but they never talked about that so much.
Yeah.
Whole life wasn't taught right.
Huh.
It was actually, we knew the whole life product was good, but how we were taught, and this is from New York Life, was almost like this whole life is great for a burial. Like if you need a final expense policy, these universal life policies, they're flexible and you got a guaranteed interest rate. And interest rates, if they keep going higher, the client's going to make more. And I could illustrate them, and they illustrated way better than the whole life. So I was selling lots of universal life. And then when I got my Series 6 and 63, right before Series 7, I started selling lots of VULs. I bought a VUL myself. I thought they were the greatest things, which kind of is a lot of the reason why you hear me talk so negatively about the IULs. Because I came from that world where I watched these products that were just touted as like the greatest thing from the client. And in 2008, I watched all those products fall on their face. I watched clients lose their policies during that period. I almost lost mine. I watched, they were called Target policies, universal life that were sold at Target. And I'm getting over your clients, maybe some of your people's, or not your clients, your audience's heads, but they were sold wrong.
Yeah.
And because they were sold wrong, I was the fix-it guy. I would get called in and they'd give me all these failing policies. And my job was to go in and try to fix them, try to either see if the client can put more premium into the policy or 1035 exchange it into a whole life, which was great for me because I didn't have to go prospect for new clients. I just had hundreds of these failing universal lives, which I thought was great. But when I was going out there, I was listening to these horror stories from these like I live in a rural area. I was going out and seeing farmers and people that just weren't really there that had this life insurance and it was for their family and they're going to lose it. So I saw a whole nother side of it. Yeah. And then, I had a couple of clients that had passed. So I started delivering some death benefits. Wow. And at that moment, even though I went on to be the investment guy, the RIA guy, but at that moment, like I fully solidified what it is we did. When I delivered that death claim, and I'll never forget the first one. His name was Bob, and he was in my hometown. I knew his whole family, and he was an old engineer. So you know how engineers are. Yeah. He never let me pick his investments. He never let me do anything, but he gave me a shot. And I remember, I did a lot of business with him, like hundreds and hundreds of thousands of dollars worth of investment business and life insurance for him. And when he was sitting in his chair telling me he was going to die, I didn't know how to handle it. I was just still a young adult. And he said, listen, Chris, all this work that we've done and all that you've learned, the only thing I want you to do is I want you to make sure that my wife is taken care of for the rest of her life. And her name was Elizabeth. And he passed. And I remember sitting Elizabeth down and I remember telling her, and she was a mess. And I said, the one thing I want to give you is a message that Bob gave me, and I had it written down. And Bob said that you will never have to worry about money again in your life. You will be taken care of. Anything you need, you just let me know. And that was true. Like that death benefit was hundreds of thousands of dollars, which, back then was more than it is today. And it was more money than she could spend. She didn't know how to take that. Wow. But at that moment, like I had a whole new love for what life insurance did and the problem that it solved, because I knew nothing about IBC back then. But, in that whole
how
Wall
did you
Street
sell
world,
how do you sell life insurance? Is it the tax benefits or
back then?
Yeah, just like
no, man, it was
like did you just was it just like the want to
buy
life insurance?
I sold a lot of term.
Okay, so you do the whole how much you love your family concept.
We would basically kind of go in and I'd just look at their debts and say, all right, let's protect all this and let's invest. It was buy term, invest a difference. I mean, listen, I know we speak about that today, but like I did a lot of that. Okay. And then universal life was for people that wanted the longer duration, a lot of estate planning. And then also the variable universal life was sold because I could mix investments and kind of do buy term, invest a difference in one product. And that was a tax play. So that's how I was selling it. And then I learned this concept back then. I'm still in the 2000s here. I was a young advisor, called SLRP, Supplemental Life Insurance Retirement Planning. And it was a New York Life. I think they kind of pioneered that thing. And I got brought into a lot of the trainings and I loved it, but it used whole life. And it was basically a strategy where you funded a whole life for 10, 20 years. And then when they retired, you basically popped the policy is what we called it, where you'd have dividends pay for the premium. And then what you would do is you would draw down the cash value and you do, surrenders up to basis and we'd flip it to loans. And it was a great tax strategy. So that's what I was taught to do with life insurance. Very different than what we do today.
Yeah. Okay. So then you're doing that. You're doing investing. you're delivering death claims, you're getting a fundamental like belief in like, hey, what we do from a life insurance standpoint is important. You're starting your flip, you're flipping houses.
Yep.
Talk to me about like, how did you get to this epiphany of like infinite banking and becoming your own banker, doing what you're doing now?
Can I go
like,
back to two things? Because there's
absolutely.
two things
Yeah.
that
Yeah.
they wouldn't understand if I told them how I got
Yeah.
into it. So what first happened is 2008.
Yeah.
I almost went bankrupt
Yeah.
because of that strip mall. And, I kind of told that. But after that, I was deeply infatuated with Warren Buffett because I wanted to be him. I wanted to be an investment guy. And I never forget, he said, buy low, sell high, and don't lose money. And there was more to it, but that's what he did. Yeah. So in 2008, when the market melted down and real estate was being sold pennies on the dollar, I literally took every penny I could and I bought real estate. And I bought real estate from 2009 to 2014. I got up to 36 doors for a young man. That wasn't bad. So I want to put it in context. I'm still a pro snowboarder.
Yeah.
I was still a financial advisor, but devastated financial advisors. My revenue flatlined, which is why I started doing the rentals, because it was a passive income. And not only that, I still had the stores, but I was kind of on the tail end. So in 2010, I sold Fat Man, which it's still around today. In 2014, I sold that strip mall, all to fuel more real estate stuff. But then in 14, I lost it all. I ended up having to sell every one of those properties that I bought because the bank, God, this is probably one of the reasons I don't like banks. The bank threw me under the bus, and I brought my 37th deal to the same bank guy that I always dealt with, who saved me from going bankrupt in 2009. And his name was Greg. And, I said, hey, I got one more deal. It's a duplex, easy one. And he said, I can't give you the loan. I said, why? He said, you don't fit in the little box. Basically, he called it debt to income ratio. And I'm like, that makes no sense. Like, this property's cash flow positive now. So it would only add to it. Like, my income's actually been doing better. And he says, no, here's how we calculate it. And he showed it and made no sense to me. But long story short, they wouldn't give me that mortgage. But then because of now they had found out that I didn't fit their profile, they froze the lines of credit that I had on those real estate deals, which were essential for finishing those rentals. It just spun out of control. I ended up having to sell one and another, and I ended up selling them all, going into a really dark place. I didn't know who I was. I didn't know what I wanted to do. And when the real estate left, I didn't want to do that part. So I started thinking, I saw a TV show, to be quite honest. It was Property Wars was the name of it, where he was flipping a house. And in 27 minutes or something, he made like $40,000. I'm like, I got to do that. So then I'm like, all right, I started flipping houses. And early on, I met a couple key people. They're very pivotal people in my life today. And Mike was one of the guys, and Greg is another guy. But Mike lived in Salt Lake City, and Mike was lending me money on the flips early on, like a new flipper. He was the guy that trusted and believed in me. And I remember I'm in Salt Lake snowboarding, and I called Mike up. I said, hey, Mike, I got this deal. I'd love to show it to you. I'm in your town. Do you think we can meet? And he said, yeah, meet me at the Cheesecake Factory. I think it was the next day, and we'll do lunch and you can show me your deal. So when I met Mike at Cheesecake Factory, now let me just give some context to Mike. Mike's family, multi-generational real estate developers and investors, very wealthy. Like, I don't know what their wealth is, but in the tens, if not hundreds of millions. So I'm sitting down with him, and I'm always a little nervous around him because he's just a high profile guy, but he always made me comfortable. And in this conversation, I just said to him, I don't know why I said it, but I said, Mike, how do you lend all this money? And he didn't even flinch. And he said, I lend from my private banking system. And I'm like, dang, Mike, you got a bank? In my mind, I'm like, holy crap, I didn't think this guy was that wealthy. He's got a bank. And I literally said to him, I said, well, you should take me to your bank. I'd love to see it. And he said, no, I don't have a bank. I mimic what a bank does. I changed where my money went. And that's where you hear me say this all the time. Change one thing, change where your money goes first. That was Mike. He said, I changed where my money went. I don't put money at banks like most people. I put it into my own banking system. Now, he did not tell me what it was. He only told me what it did. And I'm like, well, tell me about this, because I'm intrigued. I'm an advisor, right? So I'm like, Mike doesn't invest money with me, so he clearly knows more. And he says, well, I put my money with an institution that pays me guaranteed interest. And I'm like, guaranteed for how long? He's like, for my life. So in my mind, all I'm trying to do is I'm trying to fit a box in the investment world that matches what Mike's saying. And I'm like, guaranteed for life. Annuities. I'm like, life insurance never crossed my mind, to be honest. And then he says, and I get paid a dividend every single year. And he goes on, he said, and the dividends and the interest I earn grows tax free. So I'm thinking Roth IRA, but no, he's too young. And I'm just I'm probably hearing half of what he's saying because I'm trying to articulate it in my mind. But then he says this to me. And he says, and Chris, when I lend money to you, I take a loan from my bank and I give you the money. And you then pay me interest. I take your interest and I put it back into my banking system. But the thing that my banking system does is I earn interest on all of it. So, and he gave me an example. He's like, if I give you 100 grand, I didn't take 100 grand from my bank. I took a loan from the bank and I gave it to you, but my money's still earning interest and dividends uninterrupted. As soon as he said that, I was a smart enough guy. I think I was 14 years or 12 to 14 years as an advisor. So I'm like, wait a second.
And this is in 2016?
Yeah. No, this would have been around 14, somewhere around there.
Okay.
Yeah, actually it was 2014.
Okay.
And I'm like, wait a second. So the money you give me isn't even your money. And I'm thinking, it's got to be a bank. Like he's taking loans from a bank. Maybe he's taking them at a lower interest rate. He's like, no. My money stays in the account and I earn interest and dividends uninterrupted on all of it. And then you pay me interest the second time. He said, so Chris, I make money twice on the same dollar. And I'm just like, what? I'm like, oh my God, what did I just learn? Every client I have will buy this. Every client I have will want this. And I want this. Yeah. So I said to him, I said, Mike, what is it? And he says, Chris, really? He's like, you know what this is. You sell this. And I'm like, I do? He's like, yeah, it's whole life insurance. And instantly, like, it was like nails on a chalkboard. I'm like, no way. Because he had told me he puts money in and takes it right out.
Yeah, and you're like, that can't happen.
And I'm like, that doesn't work. Like, I've done tons of whole life. And I put money in, the client can't take money for years. And he said, it's a specially designed whole life. It's not designed the same way as the ones you sell. It's designed like a bank would. And it just, right now, I was in this land, in this place in my mind where like there's this thing that I just stumbled upon that Mike and all these dudes know about, but I don't. And I'm about to freaking really uncover this. So I said, Mike, you got to teach me about this. He says, I can't. I learned from this guy, Brent, but I'm happy to turn you on and give you Brent's number, Brent Kessler.
I love it.
I left that Cheesecake Factory meeting. I called Brent and I'm just rattling off to him. And, Brent's, he'll listen for a little bit, but then he stops you. Yeah. And then he says, have you watched the 90-minute video? And I had no idea what he's talking about. I'm like, 90-minute video? Brent, no, I'm an advisor. I don't know what video. He's like, let me stop the conversation. Like, I'm going to send you the video, watch the video, and then we can do a really good call. And I'm like, I don't want to watch a 90-minute video. I don't have time for this crap. But I did, and that 90-minute video changed my life. I say that all the time. That 90-minute video showed me everything Mike was doing, but a little bit more, and I understood it at a level that I'd never understood life insurance. And it just gave it a whole new shape. So that's where I was turned on to IBC, and that was in 2014. And I started using it. I didn't start selling it. I was still a financial advisor. I was a pretty well-known advisor at the firm I was at. And it wasn't New York Life at that time. But I remember I started using it. I paid off a lot of debt because I had a lot of debt. And then I started using it for cars. My first car I think I bought, and I think I've done videos, it was an Audi A8, an old high mileage one, but I bought it using my policies. I thought it was the greatest thing ever. I'm like, I'm going to get all the money back for this freaking car, which I did. And I just kept using it. And I was so intrigued with it. At that time, me and my wife were kind of working toward our TV show, which was called Risky Builders. It aired in 2018. So at this point, we're doing all the steps to get a TV show. Yeah. And I was doing these RIAs, and I'd bring 60, 80 people every month to our facility where we do a RIA. And Brent obviously loves speaking. Yeah. When we were talking and I set up my policy, he's like, hey, if you ever do an event, like I'll come in and speak. So I'm like, yeah, come on out. And I knew nothing about it, but I watched a miracle happen. Now, remember, I came from the advisor world, go out and you prospect, and you're going out to bars and you're meeting people, and you're everything's prospecting. Yeah. And I watched Brent come into my group, my folks, and he stands up there and he delivers the 90-minute presentation, which I knew it. And at the end, he says that magic thing. He says, if anyone's interested in learning more about this, put your name, your phone number, and your email on the back of the packet I gave you and hand it to me. Yeah. And I'm thinking, the very first time I saw this, I'm like, maybe one or two people. I swear the whole room stood up and brought him paper. And I'm just like, oh my God. I'm like, he probably just got 50 leads for an hour and a half of work. And everybody understood it the same way I did. I got to have him back. So I started having him back, and he'd bring me checks. You'd be like, hey, here's a fee, $2,000 or $2,500 for sponsoring this event. And then became a thing. And I wanted to have him speak all the time because he's bringing the money. None of my other speakers that came in brought a check, but Brent did. And there was one pivotal moment. And then I'll shut up. I'm sorry.
No, this is great.
I get so into this because it's like it was yesterday, but it was a very long period of time. I'm just getting old. Brent shows up, and me and my wife loved having him out. And he looked really tired. And my wife, he'd classic Brent fashion. He'd literally have a check in his pocket. And before he went on, he'd be like, Chris, come here, I got something for you. I'd go in my office, and he'd give me a folded up check, and he'd hand it to me. And he's like, look at this after. And I'd put it in my pocket, but I was just like, how much is it for this time? Is it $5,000? Because it was like back then, like $2,000, $5,000 was a lot of money for me because we were just building this whole flipping thing. And, but he was super tired. Yeah. And my wife took note to it first. And she's like, man, he looks really tired. He must be speaking all over the place. We're sitting in the back of the room, when he's up there speaking in classical fashion. I mean, I'd have him speak 10 times. I'm in the back listening to the questions, and I'm answering the questions for Brent. Yeah. And I'm literally listening to Brent do the presentation, and I'm reciting it to my wife. I'm like, oh, this is so cool. Watch, he's going to say this. And he says this. And watch, he's going to call that guy out. And it was just like, I just knew it. Yeah,
you're a student. You're a student.
Well.
Yeah.
And we always would go out for pizza after. And we went to pizza, but before we went after Brent left to go to get changed for going out, and my wife said, hey, Chris, you have to help him. She said, I know you got your whole money school thing going on. And she said, but you gotta ask Brent if he needs help. And I'm like, no, he's fine. He's fine. She's like, he's not fine. Look at him. Like, you're the person that knows this speech. You're an advisor. Like, you're licensed. Like, go out and do what he's doing. Go out and speak. Ask him if you can help him. And I'm like, all right, fine. And she's like, all right, at dinner, you're going to ask him that. Wow. And I'm just like, yeah, okay. So we go to dinner. Dinner's almost over. I didn't ask the question because this wasn't part of my agenda. I was being very selfish. And I remember, like, you could see my wife was like waiting for me to ask. And I didn't ask. So she kicks me. She kicks me under the table. Brent sees this and he's like, oh, everything okay? and she's like, no, Chris has to tell you something. She's staring at me with that scouring eyes. And I'm like, yeah, Brent, you looked really tired. Larissa was thinking, because I made her, was thinking like that maybe because I've seen you do this presentation so many times, I could help you. I could go out and speak at events and help you build whatever it is you're building. That was where it began. And it wasn't because I truly wanted to do it. It was because I was trying to appease my wife, which then led to me going out to Florida. But it wasn't just me going out to Florida with the intent, I'm just going to go help Brent. I still had this stupid, and I'm saying this for a reason, because a lot of times in life, most people have an agenda that they want. Yeah. Drop your agenda and help somebody solve a problem.
So good.
And I'm going to tell you why. Because I was about to fly to Florida to meet with Brent and Terry for 3 days about this and how this would work. And in my mind, I had a whole presentation. I was going to talk to him about, well, I got this money school thing and I can come out and I can help you guys. I can speak at events when you need it, but maybe we could do this event where you speak and then I speak. I was selfish. I was just being selfish. And my wife, like, I told her what I was going to do. And she's like, that is absolutely, she literally grabbed it and she said, this is not what I talked to you about. You're going to go out there and you're going to ask him how you can help him, not how he can help you. This money school thing is never going to work. He's already got something working. You know that. And I just dropped all of it. And I just said, you're right. Wow. And I went out there, dropped my guard, never talked about money school there. And I said, how can I serve you? And me and Brent and Terry laid out everything that became the Money Multiplier as it is today. Now, he was doing Money Multiplier, but we laid a lot out.
I think you were for sure gasoline to what he was stuffed to. And it's evident in just your communication style, the content, social media, the passion that you bring. Dude, you're super well known. If people think, okay, who are some of the top people I know in this space? You're at the top or near the top. Thanks. Because you guys spend hundreds of thousands, probably millions of dollars when it comes to marketing, getting this message out, and we all benefit because of it.
Hey, it's Caleb Guilliams here. I'm just interrupting this video quickly to invite you to check out our And Asset Vault. You may have been there. We've actually revamping it. And if you are somebody that wants to learn more about, is life insurance the right fit for me? Does this And Asset make sense? Like, does this actually help me be more efficient? We've put together a 10-minute documentary style video And I think does a really, really good job giving the history, why the and asset, different setups and designs that we use. And then we have an and asset vault that gives like case studies, calculators, handbooks, and so much more. We are here to serve you, whether it's a conversation, whether it's education, or the video. So make sure to go check out andasset.com/vault to learn more.
And the one interesting thing a lot of people don't know is when I made this transition, I was putting myself in a really bad financial place because you know how this industry works. Now, I come from this industry, so I knew. So the way we design the policies, we get paid way less in commissions. And I knew this, but I didn't know how long it was going to be before I got the first check. Because I sort of burned the bridges. When I committed to this and when I did this with Brent, I went all in. I literally went all in. Like, I had already retired from Wall Street, so I had a little bit of money coming in from that, but it wasn't much, a couple grand a month. And that was 18. I forgot to tell people that. But there was a period of about 4 months where I didn't know how I was going to pay my mortgage. I didn't know how I'd make the car payments. And my wife knew this, and we were literally struggling. And it was because I'm out there trying to build this new thing. I'm doing it knowing that the commissions are really low, and I'm doing it knowing that the underwriting process is a long period of time. And Brent, I'll never, a lot of people are like, why are you so loyal? And it's because you don't ever bite the hand that feeds you. When I was down and out, when I was in a really low, dark financial place, Brent was the only one helping me. No one else. No one in Wall Street ever did this for me when I was hard times. But he'd just give me a little feeder checks and he'd say, hey, you're doing a really good job. And, just pay me back when you get money, and he would give me $5,000. And then I remember we'd be out with him and I'd be speaking at an event with him. And I'll never forget, it was in Albuquerque. He pulls the check out and he gave, again, same thing, fold the check, hands it to me. He says, don't look at this until you're on the plane going home. And I look at it, it was $10,000. And he gave that to me knowing, and I'd never tell him I'm struggling financially. He just knew it.
How did he know though?
I don't know, but he knew I was. Probably because he knew the business. And he knew I was putting a lot of business in, but I wasn't paid on anything because obviously he was the general agent. So he knew that I hadn't really received any money, but I wasn't complaining because I was so excited about what we were doing. And I was just loving it. But that $10,000, I'll never forget that check, fueled me for months. And then I started getting checks. And I remember my first commission check. And then I had a friend who did a fairly big policy, and Brent did it because I was, in the beginning, you use your mentor.
Yeah, totally.
And I had Brent do the call because it was like $100,000. And then I made like $20,000, but the checks just kept going up and up. But I just say that because most people during that period would have quit.
Totally.
They would have just walked away and been like, this isn't worth it. And it's like, that's the only way people fail. They quit 3 feet from gold.
Yep. And that's a Think and Grow Rich reference.
It is.
Larissa, your wife, was she 100% behind you the whole time? How did she support you?
Well, I mean, in the early days, I was on the road. I was speaking at 2-3 events, sometimes every week. I was on the road all week. Never saw her. I wasn't home. I was just traveling. We were broke. I mean, like,
it's kind of hard to imagine now because you guys are doing well.
She talks about it now. She's like, I remember back when you were first starting.
This is only 5 years ago, dude.
Yeah, 5-7 years ago, somewhere around there. And I remember she was like, I remember getting that credit card where I ran it up to $2,000 because of groceries and other things, and you freaked. You didn't know how you were going to pay it. $2,000. That's just what it was back then.
Yeah. Dude, I really, really appreciate you just breaking this thing. I don't know on how many podcasts you get to share this story, and I just feel very grateful for you breaking this down. What did you originally talk to Brent when you guys were like, we're going to build this money multiplier thing? Do you remember like what the game plan was? And then looking back, what were like some of the key pivotal marketing pushes or like movement, like message that you feel like, man, like we need to get this out? And if people understand this, it'll be a line outside the door. I remember one of my epiphanies was like, okay, if people understood what I know about life insurance and how it can be set up and used, there would literally be a freaking line outside the door. I told this to an executive at an insurance company, and he said, no one will ever line up to buy life insurance. I was like, I respectfully think you're wrong.
Well, no, he's right. Nobody will ever line up to buy life insurance. Everybody will line up to get what life insurance does. Nobody wants to buy anything, but everybody wants what life insurance does.
I agree. Yeah, and we're a good example of that. People daily are reaching out to our companies and saying, hey, I want this.
Yeah.
And it's
We're not
because of
selling it.
and it's because of the message. So what was like, do you remember
Yes.
what you originally talked about and how has that changed? And like, what were some of the key moments in the last 5-6 years that you're like, wow, like we're starting to build momentum and this community is amazing, insights. Like, what were some of those highlights?
So at that table with Brent and Terry, we just talked about it this morning at breakfast. I was taking notes on a yellow construction paper kind of,
Yeah.
and it was a 4-quadrant model of how if I went out and spoke at an event with Brent, or if I went out and spoke at an event by myself, if, we did joint work and if he paid for an event for me to speak because I couldn't afford to, pay sponsorship fees. So it was these 4 quadrants, which are still in effect today.
Wow.
Almost exactly how they are. And that we laid that out, and we laid it out on how I was going to basically go out, spread the message of the Money Multiplier, and literally take what Brent had built and just take it to another level to really serve the real estate market. Because at that point, like, he wasn't going after real estate in the industry. He was like chiropractors and things like that, network marketing. And I brought real estate into it because I understood it. And that was what we laid out, and we laid out a big vision of how we would do it. But the vision was very small, but it was very big, if that makes sense. It was like, it was me coming in and helping him do the same thing and just run 2 parallels side by side to build it. But I mean, now it's far, far, far bigger than anything I could have ever dreamed it being.
So when you look back, what were some of the key messages that you either took what Brent was saying, or how have you tweaked the message since, of like, hey, this is maybe how we can share, like,
I maybe simplified it. I took it and I said, listen, to become your own bank, it involves changing one thing, and that is where your money goes first. And if you change where your money goes first, then all you need to do is add one step. Can you change one thing and add one step? Everybody says yes. If you can, you will take back the banking functions in your life, and it will change your financial future and your family's financial future for as long as you live. And that is a certain. And as soon as I started telling that story, and I've shortened, people ask me, elevator, like, what do you do? Well, I show people how to take back control of their money. Oh, how do you do that? Well, I do that by teaching you how to become your own bank. And if I can show you how to become the bank, you will never need banks again. And you will always, always be in control of your money. Thanks. This is my floor. Let me know if you're interested. I just simplified his message because his message was solid. And that 90-minute video, as it was back then, hasn't changed much in 7 years. I mean, it's literally almost stayed exactly how it is. I've just basically brought the marketing side to it. So Brent was always like, speak, speak, speak. But when COVID hit, the world shut down. And I don't want to go too long on that, but when that shut down, he didn't really have a backup plan, but I did. And that's where I started my first webinars. I started going out and doing, YouTube and Instagram and Facebook and all the social media, and diving deep into the marketing aspects, which I just never stopped. And I think my success is largely part of just being consistent and persistent.
Being consistent. You're probably the most consistent person in our space. Like, it's just one of those things where it's like, if you keep building, you have over 50,000 subscribers. You're very active still on YouTube. You're on social media. How many stages did you speak in 2023?
I don't even know.
I mean,
a lot. I mean, I speak all over the place.
Yeah.
And I'm speaking in less stages than I used to, because now I'm doing most of my stuff, I'm being more selective in where I go and what I speak on.
So now I'm going to ask you a couple hard questions. You ready?
Sure.
Is there anything that you've changed your mind on since learning about becoming your own banker? Like, this is like life-changing moment, 2014, you're learning this, you're getting your policies. And then you partner with Brent in 2018, and you're learning. I've changed my opinions on a ton of things, and I have zero regrets, but there's things that I'm like, man, I was like, I changed my thoughts here, and I changed my thoughts here, and I changed my thoughts here. Anything that you look back on, you're like, okay, no regrets, because I know you well enough that you're not sitting around sulking. But is there anything that you're like, man, I wish I would have said things different, or like I have a better 100%. Understanding now than I did in 2018?
In the beginning, and I think this is because I come from Wall Street, it was always numbers. In the beginning, I was so hyper focused on the numbers, like the spread and like doing the actual math on everything. And I will say that I'm not saying it was a mistake, but it was short-sighted, because it's never about the numbers here. And the numbers don't even matter. And people won't understand that listening to this, but it's not about the numbers, it's about the process. And I really kind of wish I did it earlier, but I really pivoted to really teaching a process that it involves numbers and it involves all that stuff, but I don't need any numbers to teach what I do today. It's a very simple, repeatable process that every single person out there can do if they set their mind to it. But other thing I did is I always wanted to help everybody. And now I know who my client is not, so that I can figure out who my client is, and I know who I can't help. And it's hard for me to still, even today, tell people no, but I tell a lot of people this isn't right for you.
Yeah.
And I think that's helped me tremendously. But
Is it mindset or money?
mindset, 100%.
Yeah.
Mindset.
What makes someone not a good person for this process?
They want quick money. They
Yeah.
think getting rich quick is the way to
Yeah.
go, and they're buying into all the newest, latest, greatest,
Yeah.
whether it's Bitcoin or whatever else. I'm nothing against
Yeah.
Bitcoin, but like, the quick money.
Yeah.
They just want to get rich fast, and this is
Yeah.
not for them.
It's interesting. Thing I say a ton is like, this is not an investment. This is not an investment, because I think if you compare it to an investment, it's just unfair across the board.
Mhm.
There's unrealistic expectations. But if you compare it to a storage place, a protection vehicle, it's like, you actually understand the multi-dimensional aspect of life insurance. It's pretty incredible the
Mhm.
multiple jobs it gives you. It's like, if someone really leans into that, it's a game changer. If life insurance didn't have any other benefit other than the rate of return and borrowing function, unpopular opinion, I don't think what we do is that valuable.
Mhm.
So it's like, we can talk about arbitrage, and I personally don't believe that I think we talked on your show. It's like arbitrage. And so, but when you start adding the death benefit, chronic illness riders, protection, the tax benefit, now the tax benefit potentially makes their arbitrage if you factor in taxes. And you start adding in all the benefits you're getting with life insurance and the original epiphany that you had. You're like, I get $1 doing two things.
Mhm.
I think from an entrepreneur, I find that entrepreneurs or people that understand real estate really get this.
They do.
Because they're like, okay, you're telling me I get all the benefits of all this list for the rest of my life, and I get to be able to make moves over here.
Mhm.
Like that for me is really, really special and powerful. When I first got into this, though, I was hyper focused on the numbers as well. I said I cared about all these other benefits, but I didn't. And so it would be like, I would really have to justify some things. But now understanding all the benefits of life insurance is like, man, I become less analytical too. Like, numbers are important, don't get me wrong. Like, they're super important, especially if you're comparing one policies versus the other. Very, very important. But at the end of the day, it's like, no, like I value creditor protection. I value having a death benefit insuring my life.
100%.
I value having more options in the future. I value understanding how this could be a super bond in the future. And it's like, when you start,
it will be a super bond in the future.
Right. And
No
so
ifs,
when you
ands, or
start,
buts about it.
when you start adding up all those benefits, it's like, I don't know how, like, everyone needs this.
Well, you remember back to the Mike story. Remember, he didn't tell me what it was.
Yeah.
Until the end, but he told me what it did.
Yeah.
And I could think of nothing other than, I need this.
Yep.
And then he told me what it was, and I'm like, I don't want that.
Yeah.
How many people actually go through that? They want everything whole life does, but then when you tell them what it is, they don't want it anymore.
Yep.
That's sad. That's what I mean by understanding who my client is not, so I can understand who my client is. And the other thing that's vitally important for most people to understand is, I know, it's easy for people to hyper focus on the whole life, because it's the product, it's tangible.
Yeah.
But just so everybody understands, you'll never get wealthy because of whole life.
Yeah.
Whole life will never make you wealthy.
That's good. But
applying whole life to the process called the infinite banking concept pioneered by the late Arnold Nash will make you wealthy beyond your wildest dreams. And you will the difference between a person that's rich and wealthy is a person that's wealthy learns how to not give the money back.
Yep.
Rich people make it and give it back. Make it and give it back. Wealthy people never give it back. The infinite banking concept makes sure that you never have to give the money back, because you control all the reasons. You plug all the holes in your financial
Let's
life.
unpack that. Let's unpack that, because I look at, when I think of infinite banking and using life insurance, I look at it as a better place to save my money.
Yes.
Okay. So I'm saving money, and I could save it into a high yield savings account, and I could take that money out, do other things, and pay myself back, just like the process.
To the bank account.
Yeah, to the bank account. I'm earning right now 5% interest, but 2 years ago it was less than 1%. So it's like, okay, that's the banking function. And from a financial standpoint, Chris, like, you could argue that depending on the situation, you almost have just as much money as an infinite bank. Like,
you would. And that's important.
Right.
Everybody's short-sighted.
Yes.
Okay? 5% on a bank account or high yield savings. They're like, why would I ever do a whole life where I don't even, I make less than I would in a bank account? People forget banks are only paying you high interest because we're in a high interest rate environment, and it is cyclical, and that will change. I bet next year will come off. Jerome Powell has already said next year at the latest, we will start coming off of these highs. So your bank account is not fixed. It will not stay at 5. It will go to 4 and 3 and 2 and eventually be nothing. Whole life, the one vehicle that everybody hates, but everybody needs to understand, never changes.
Right. Well,
never changes.
Yeah. I mean, there's built-in guarantees, and whole life will get long-term 3, 4, 5 times greater internal rate of return than a savings account. So but that process, like, okay, so it's a better place to save your money. It's a better place to save your money. And I agree with you. Infinite banking won't, I actually believe that what will make you wealthy is your ability to create value and the activities that you do in investing. Mm-hmm. So my ability to create value, continue to be able to serve, build all these things, creating money. Life insurance, infinite banking is a place to keep it. Obviously, tax strategies are also important. Keep your money. And then how I utilize that money is important. So you could say whole life is a core component of that, but I would actually attribute the true wealth to creating, multiplying. Life insurance is foundation. And the beautiful thing is, when you look at, we're in this beautiful building, we don't see the foundation. Nope. Foundation's not sexy, but if they didn't have a foundation, the building doesn't get to be it's not here.
Well, the interesting thing.
So it's just I think I don't get as, because I see infinite banking get overpitched. And I'm going to ask you another question about all these people on TikTok and all these and it's just part of me, Chris, really is I get frustrated by that, because it's not that it cheapens, but it's you're not going to get wealthy putting life insurance and then buying sports cars. It's you're not going to, the only way that works is by you creating more money. You could justify you driving a sports car. You now show up more powerfully, you make more money. And yes, your money's compounding over here, but it's not it only makes sense if you're making more money in the activity, and life insurance is just an efficiency foundation. Mm-hmm. It just helps you create more efficiency in the process. But if you're not creating and if you're not multiplying, it's not going to change your life.
Our company name is the Money Multipliers.
Yeah, there you go. But you get what I'm saying? This is
none of infinite banking doesn't work without creation. You have to be able to create.
Right.
So if when I talk to people about this, and just eliminate the vehicle, the whole life, because you're right. Yeah. You can't see the foundation here. And what a lot of people don't understand is the wealthiest families throughout history. I've done a video on history. I did more due diligence on that. When you start looking at all the bankers, Morgans, the Stanleys, and all of them, they all used whole life as a foundation for storing their wealth. Mm-hmm. But nobody knows that because it's a foundation. You don't see it. They don't talk about it. They don't be like, oh, hey, all my money's in whole life. But it was. But nobody knows that. Yep. And because nobody knows that, they think they know what they don't know. And that's one of the biggest problems, I think, in the world, but also definitely in the US. And I love that, because creation is the one thing that will differentiate the 5 versus the 95%. Yep. It's been proven. 5% of the people that will retire retire financially secure. Only 5%. Yep. So what's the difference between the 5 and the 95? The 95% conform to somebody's failed idea, somebody's failed reality, somebody's failed plan. Yep. The 5%, you, me, everybody we deal with, what did we do different? Not much. We created. That's it. It's creation.
Why do you recommend people use infinite banking and buy cars?
Why?
Yeah.
Because everybody's going to buy cars. Mm-hmm. And if we eliminate cars and from the infinite banking, there's too many people that don't know how to invest money. They haven't learned how to invest. They just invest in things because their cab driver or their Uber driver tells them this is what you should invest in. They don't know, like, and understand what they invest in, which is more dangerous than anything else, but they're always going to buy cars. So with cars, let's just say car loans are 7% right now. That's 7%. Most people can't even find mutual funds or an investment portfolio that will consistently pay you 7%. So for me, I do talk about cars a lot, and I do have lots of very nice cars that are all funded through my banking. And a lot of people are like, why are you doing that and not this? Because that is the safest place I can go for making a decent return that would rival what I'd make in the S&P 500 over a long period of time. And I get to drive the car that I want. I love Porsches. I don't hide that. I'm not a material guy. I don't wear fancy things, dress fancy, but I love my cars.
So is it another way to say, by helping people buy cars with life insurance, you're just creating a more. They're just saving more. You're just
Call it a foundational
well,
piece.
you're just getting them to literally save more.
I'm
right?
literally just getting them to understand the concept through something they're already having to do, because they're going to have to do that. It's also why I talk about paying off wealth with this so much. Like, granted, like we can go out and invest money and we can buy real estate and do private loans, which I do all of that. But people can't articulate with that yet when they're buried in debt. So let's show you how to build wealth through your own debts and expenses, or let's just show you how to use that stupid car and take back a little bit of extra money every single month that you're giving away. Because if I can teach them how to do it with a car, I can teach them how to do it with private loans and investing and everything else. But I can't go, with investing when they don't know, like, and understand that. They know, like, and understand the cars. So let me show them how to get all their money back.
And I think it's really powerful. If you look at high interest rate debt, that's like a guaranteed. Not investment advice, but like if you have a credit card line and you pay that off, whether it's with cash or with infinite banking, like you're getting a guaranteed rate of return because of it's the reverse opportunity cost. Like this is what you would have to pay. And so, I mean, there's really,
it's single biggest topic I talk about in all my videos is debt. And exactly what you just said, because it is the fastest way every single person can build wealth, and it's through their own debt.
What are your thoughts on 30-year mortgages and just like, I've heard some people teach infinite banking and they're helping people pay off their mortgages with infinite banking because banks are evil. And that's I'm just curious.
It's not a fundamental reason to pay off. It's not just because banks are evil isn't a fundamental reason to pay off your mortgage. But if you understand the velocity of money and you understand the velocity of interest and how banks make money on a mortgage, I mean, so many people are like, my mortgage is only 3%. I'm like, no, it's not. Read the fine print. Your mortgage is probably like 60% in the first 8 years. You're paying 60% interest in those years because it's velocity. Your rate is only 3%, but you're giving away 60%.
Right.
So I'm not the guy with infinite banking that teaches paying off your mortgage. But do I tell people to pay off their mortgage? Absolutely. But I usually don't do it with infinite banking because a house mortgage is the biggest debt most people have. So if we're going to devote infinite banking money to paying off a house, we have no economic value today, next year, the year after. So most people will never complete the job because they won't make it to the end.
And then all their money's tied up.
Well,
and the goal is you have a paid off house, then what?
Then you buy another house.
Well, then it's like
you upgrade
the
to
only
a new
way
house.
that you can get that money out is you sell or refinance or like do a HELOC.
I teach people using HELOCs. That's what I tell them to do with their house. And I don't tell people to take their HELOC, put it into a policy and do that. I'm not that guy. Now, do I have people on my team that like doing that? Yeah. I'm just not that guy. I have a HELOC on my house and I lend direct from the HELOC. I don't take the HELOC into my whole life. I just don't.
30-year mortgages, I think, unpopular opinion, I think they're amazing. I understand when you look at the first 8 years and you look at all the money going to interest, but if you look at opportunity cost of like, yes, if we just look without the value of what we could grow money, you're totally right. It's like, then the goal is let's pay less in interest. Well, you also have to balance the other side. And if you have a 3% mortgage, mathematically, you need to earn 3% or more, 3% or more. And so it's, again, now that we're at 7-8%, this could be like, then you look at the market all-time high in where interest rates are at. You could make an argument that paying off debt at 8% could be better than putting money in the market. You could make the argument there. My whole point is I'm a fan of, mortgages for a lot of different reasons, from just like cash flow, inflation, and I'll
never agree with you that 30-year mortgages are amazing. I just won't.
What can I get you to do? Let me finish
that. Everything else you said is exact.
Yeah.
I never will tell people, take your policy and pay off your mortgage. We teach it in the one video, but you notice it's the very last thing, because that chiropractor example we give, he pays his mortgage off, but that was after everything else was paid off.
Yeah.
Okay. It wasn't before. So I just think the opportunity cost that people would give away by trying to pay off a mortgage using this is far greater than anything they will ever get from paying their house off. And once you got your house paid off, what do you got?
Yeah.
A bunch of bricks and mortar that you can't, it's just dead money.
What could I do to convince you that a 30-year mortgage is a great tool versus a HELOC?
Show me a 30-year mortgage not issued by a bank.
Okay. But HELOCs are issued by a bank.
They are. And I do use banks, so you're right.
But even like a HELOC, I would argue that a 30-year mortgage sold the note is safer from being called than even HELOC.
They are.
So
Much safer.
So it's just like, Yeah.
But I don't know if you need to convince me that 30-year mortgages are great or not great.
It's a tool.
Because it's a tool that everybody in the business is going to use. And I'm not out there telling people pay. I mean, I got maybe 2 videos that says, hey, here's how I'm paying off my mortgage. But remember, I'm paying off my mortgage because I'm financially able to. And like, I have disposable income that listen, I could put it here, there, but like, I just don't want a mortgage with the bank. But you see, when I pay the house off, guess what I'm going to do? Get a big old fat HELOC and lend from that. So it's the same darn thing, man. So I'm not disagreeing with you at all about mortgages. I think they're never going to go anywhere. And I think they're a great tool to be used.
What is your thoughts on the people out there on TikTok, especially just pitching infinite banking? What are your thoughts? A lot of them are using it IULs. But like even before that, like, and again, with a good, you have bad. You guys inspired a lot of people around this concept. A lot of people are looking at your videos and saying, like, I'm clipping this, or, you know, and I've had people use my book and pitch garbage. That's the cost of putting your name out there.
Yep.
What is your initial thoughts on the lot of noise out there that, you know, we're a part of? And what are the things that make you cringe inside?
So first off, I'm flattered. I'm flattered that there are people out there taking my content. I don't get mad when I see somebody repurpose my video to try to sell IULs. I'm actually flattered because they found my video and something in there rang to them. But then they went to the dark side and they said, I can make a bunch of money. And they're putting themselves before their client and they're not giving first. And that is where I really have a problem. IULs I will never like, but I've been doing this for 21 years. And in 21 years, I've watched the rise and fall of ULs, the rise and fall of VULs. I've seen the cycles of these new fancy pitched vehicles that pay high commissions. And IULs will go by the same path as all the others. They will not make the long run. I don't care what anyone says. They'll always be around, but they won't be as prevalent as they are now because they will fail in the next economic downturn and people will see the colors of them. So I get mad, but I also recite the serenity prayer a lot. And I understand the things that I can control and the things that I can't. And I know the difference. And I can't control what other people do. So why? It's kind of like, you know, an eagle flies, you know, and a crow is one of the only birds that will attack an eagle, but an eagle never, you know, attacks the crow. It never goes back at the crow because it's not going to waste his time on a stupid crow when it's an eagle. It's like, if you're going to be an eagle, be an eagle. Don't waste your time, you know, trying to fight crows. I'm just done fighting with them. Fighting with them. And like, that's a relatively new thing.
But is it the only thing that you disagree is IUL, or is there anything else that people are saying?
No, I disagree with a lot of the ways people are teaching, you know,
like
the infinite banking concept. And I think, well, like they don't even understand what the process is. They think it's just a product and they're trying to sell a product and say it's IBC. IBC is a process, R. Nelson Nash. And I think that's the one thing I disagree with. All these people on TikTok, and we'll just pick on TikTok because it's the easy one to pick on, you know, they're talking IBC. Oh yeah, we do IBC. They don't understand IBC because they never read Nelson's book. They never went through and became an IBC practitioner. And therefore I think they're just selling a bag of lies.
Yeah. I mean, we could unpack that.
I try to keep Nelson's vision alive.
So let's talk about the process there. What is the key to the like we talk about process of product, and you talked about your elevator pitch. It's like one thing, one step. You change one thing, one step. What are what is the essence of the process?
It's a circle. Okay. It's a circle. Your money starts on the left side of the circle, moves over to the right side. We'll call that the opportunity zone. From the opportunity zone, your money has a chance to go work for you, paying off debt, buying cars, investing in real estate, you know, lending money out. But when it's working, money works for you and it will always work for you 24/7. Unlike we can't work 24/7. Money can't. And when it works for you, it makes more money. And when it makes more, you complete the bottom part of the circle and you send that money back to its original source, which is your banking system. And the more times, like Monopoly, the more times we can go around that circle, the more wealth we create and the more good we do out there, and we do it in full control. So that's basically the big thing I do is I've literally simplified this whole thing to a circle. Just move money around a circle and you're fully in control of it.
And you could put your money in a savings account, but life insurance over a long period of time.
But I do
give
teach
you 5, 6, 10.
I even teach that because
because it's easier to understand. Like people,
Australia, New Zealand, other countries, they don't have the vehicle. They don't have the machine. So I teach infinite banking using bank accounts, brokerage accounts.
Which is beautiful because it's like you see it grow every year. It should grow if you're paying yourself back, because every year but then it's like if you just switch out the product with a properly
then it
structured
becomes
life
more
insurance,
efficient.
it becomes,
That's
what,
it.
any thoughts on designing life insurance? Do you have any thoughts around like your 2 cents around designing? There's some people are heavy front loads, 1090s, like, or is it just every person's a little different? Okay.
That's my answer. They're all good to solve a specific problem.
Okay.
Every design works if it solves the proper problem. I think what I don't like, and I'm not going to use the name, but you know who I'm talking about, are the people that go out there and say, this design is the best.
Yeah.
That's a lie. No design is the best. Nelson 60-40 is not the best. The 90-10 is not the best. There is no design that's the best because no one has the same problem they're solving. Right. If everybody had the same problem, great. Maybe then we could make an argument that there's one design that's the best. But until that day comes, and it never will, everybody's problem is different, which means every plan design has to be unique to solve the problem.
We had someone in our firm come in, and we actually had to give them a majority-based policy because of an estate purpose. And there's a lot. It was like, but I never thought in a million years, knowing what I know about life insurance, that we would design this. But this design was like the best fit for this individual, and they were super well educated. Like they were the ones working with us, and it just goes back to what you're saying is like you got to get really clear about where you want to go, what you're trying to accomplish. Remember, life insurance is just a tool, a part of the process, and that tool needs to be designed as a proper foundation. And not all foundations are created equal. Just put it that way.
Absolutely.
Anything, I know I'm going to throw a curveball. Anything you want to challenge me on? I know this is my show, but is there anything that you're like, Caleb, like, you're saying,
I do.
Like,
why haven't you gone through and become an IBC practitioner?
It's a great question.
Yeah.
There's really two answers I'll give you. I have paid for the practitioner program, and I have not taken the test.
So you're just like me. But I took the test finally and passed.
Yeah.
It,
and I've actually reached out to David Stearns and was like, hey, I need to take the test and go be a part of this. I hate taking tests, heavily dyslexic. And it was just one of those things where it's just like, I want to honor Nelson. Like, I think some people out there are just like, hey, like you're a disgrace because you're not.
Oh, I don't think that at all.
And so hopefully when people look at the content, like I'm not trying to be a disgrace. Like I'm really trying, like I try to be an honoring person in what I get to do. And we have people on our team that are practitioners, and I, back in the day paid for it. I'm not sure if that's still, that price is still honored, but I reached out to David Stearns a couple months ago and said, hey, I want to have a conversation about because I'm at the level, I'll say that it's like, I want to get his blessing again. I don't, I just want to be like, hey, we all good here. Because I think the Nelson Nash Institute is vitally important. And I also, if I can push back, I think it's like, I want to say this in a good way. It's vitally important, but I also think like we have to be able to come to the table and not just be like, if for example, if I was talking to someone who's not an IBC practitioner, like that doesn't disqualify them from like being able to teach people even what we call infinite banking. I do know that there's certain trademarks out there that I'm very careful, like not to use from a standpoint of, I'm not going to use it because I want to honor the trademarks that the Nelson Nash Institute has. But yeah, it's one of those things where that's process. Well, and that's, I appreciate you asking that.
Well, it's interesting because I don't know if you know this, but I did the same thing you did. I bought the practitioner program years ago. Started studying it, got busy, didn't really see the value in just going through and taking a 118 question test because I don't like taking tests either. The Series 7 destroyed me from test taking. I just hate it. And it just kind of resurfaced back, and it was brought back to me, and they said, how come you don't have your IBC practitioner? And I just said, I just haven't gotten around to it. And they said, yeah, but we all need to come together
Yep.
to one common consensus and one common goal. And the practitioner is the only thing that can do that differentiates that. But I don't look at somebody else that's out there teaching. It's not a practitioner. I don't look at them any different than I do an IBC practitioner. Zero. Absolutely none. But I just think that moving forward, because you mentioned all the TikTok people and all the people that are entering the space saying they're an IBC person, it is the one thing that does say you are not an IBC practitioner. So bring that to the table and do it, and you'll understand why IULs can't be used for this, because it's right in the practitioner program. But it also
but is it because I read Nelson's book and it's like why IULs? What? Well,
it fundamentally breaks down how an IUL functions,
right?
Which fundamentally, it just is not a good vehicle for short-term uses like infinite banking.
Yeah.
Period. I'm not saying IULs are bad, but they're sold wrong.
Totally.
They're sold completely wrong.
Let me ask you this. Can someone go through the practitioner, and do they know everything? Like where is the practitioner program like very, very good, and where is it like, is there anything that it lacks from a standpoint of like, this is just asking for
details. It lacks a lot of details.
Details as in like in how the insurance companies work, or how like
I think in how the insurance companies work and how the insurance companies view the infinite banking concept and look at it. And also I think where it really lacks is the things you talked about, is it never talks about the different design for the different needs and goals. Nelson came up with a vision, and they've done a great job with it, but they have not yet kind of taken it and said, there's lots of problems to solve with this. How do we do that the most efficient, best way? And I know we're getting to the tail end of this, but the one thing I've set about doing, and I've spent hundreds of thousands of dollars, and I won't stop spending, is to mathematically prove what Nelson Nash pioneered, the concept, the process. I have found a way, because I'm just a math nerd. Like that's what Wall Street was mathematics. I found a way to mathematically prove this without you can't fight math. And I get a lot of financial advisors and other people saying, oh, that's BS, or it doesn't work that way. I can mathematically prove everything I teach now. And it has not been easy. And it has, and I'm about to launch something that's going to be a major disruptor, and I'm going to create a lot of haters. But I have mathematically proved that buy term invest the difference is not better than buying whole life and doing the exact same thing you would do with buy term invest the difference.
I would love to have you back on the show breaking that down, because it's
heavy.
I do a series with Todd, and we just did the whole buy term and invest the difference concept. It's very powerful. And it's like, it really gets you, if you just care about 30 years, I think you could justify, like, if all we care about is net worth, buy term invest the difference.
No, it's about 16 or 18 years, depending on the fund, like what time frame you use in the markets. But we pick the best time frame just to show the best, and we can show any time frame in the market, but it's like, it's not as long as you think. Yeah.
So I look forward to doing that. Question about the Institute again. If we zoom out, what when it comes to the Institute is like, because some of the worst teaching that I've seen.
I know what you're asking.
Some of the worst teaching I've seen
from IBC practitioners.
Is from IBC practitioners, and this is what I see it as: is it's like a big it's a way to honor Nelson, and it's it's all economics, and it's Austrian economics, which I'm a fan of. So it's like, I'm a fan of that. But as far as I'm concerned, they don't teach anything about actually how to structure life insurance. Which is, we have people, IBC practitioners, that are structuring policies that are horrible.
Terrible.
And I also think that people get way too like, we're going to like destroy the banking functions. All of our money is going to go into life insurance. And like, from a life insurance side of it is a problem. You even get insurance companies that don't like infinite banking because of some of those messages.
Yes.
And then the other thing that, you're just getting me going, the other thing that rubs me the wrong way is then the people that are like, attack you by saying like, you need to have this thing if you're going to be like talking about something. And that's like, for me, like a free speech fundamentalist. Like, I'm like, I don't like someone telling me like, this is what you have to do. I wish I could be giving them money every year, because I just like, can I not take the test? But like, and again, I've had conversations with Jason Lowe. I've had conversations with many people. I will follow up with David Stearns again. But I just like, it's just one of those things that does bother me, if I'm being honest, of like how cliquey it feels. And at the same time, if that is the only path, that it's like we all come together. I've seen some things that I don't necessarily think.
Right now it is.
Yeah, and
Right now.
I've seen some things where I'm like, I don't know if I agree with that.
There's a lot I don't agree with,
Yeah.
but I'll tell you the total answer to that. As a financial advisor, to be called a financial advisor, you must have a Series 7. Like there's rules of engagement. Like if you got 6 and 63, a lot of these guys out there that are selling IULs, they're calling themselves financial advisors, but they're 663. You can't call yourself a financial advisor until you have 7. But once you have your 7 and you're a financial advisor, you really don't have any presence in high net worth circles. So when you start going to family offices, you know what they're asking, or high net worth individuals. Are you a CFP? Are you a CFP, a certified financial planner? It's just a stupid test, man. A CFP, it's a pretty extensive test and program, but it's just like the IBC practitioner program. But it's in the public viewed as another level, and you're held on a different level and you're viewed on a different level. So to me, IBC practitioner, the certification is that of which the CFP is, or CFA is in the financial advisory world. And it doesn't change. Everything you said is exactly correct. It doesn't change who you talk to. Nobody should say, you're not a CFP, you shouldn't be doing any of this. No, but it is viewed as this another level and more respect. So I think the IBC practitioner program has the ability to be that to IBC what the CFP is to the financial advisor world. But I think there's a lot of work to be done.
And I think to your credit,
and I think I can bring a lot of that work.
And I think the only way that we get it to that level is if we all come together. And I think
that's what I'm trying to do.
Okay, that's good.
Whether or not I like the IBC practitioner program or not, or agree with it
I
all,
just for the record,
it's the starting place. Yeah. But I think there's new blood that needs to come in that takes it to where it needs to be next.
Hey guys, I want to first of all thank you for watching the video to the end. I look forward to hearing your thoughts, comments. I read every single comment on every video. Want to give you a quick update. Since filming this video with Chris Naugle, I have become an official IBC practitioner. I did that because I felt like Chris made good points. I want to be a unifier, and I felt like one of the best ways that I can be a unifier is to actually put my head down, study, go through the program, and take the test. And as of a couple weeks ago, I become an official IBC practitioner. My thoughts around the practitioner program have really not changed, and I will shoot a video here in the future that go through my official stance, but I will say that I am very optimistic for what the future holds, and I know that myself and many other people are committed to really up-leveling the game, and I'm grateful for the people that have come before us that have made the path more bearable, I'll say, and have a lot of arrows in their back because of them being pioneers. And so wanted to just give you that quick update, more to come, and I hope you have a phenomenal rest of your day wherever you're watching this.